Vancouver real estate has already crashed. And that's not to say that it can't go lower, but what I'm about to show you might have you thinking twice about its current valuation. Because whenever we talk about real estate, we always want to talk about the price. Price needs to come down. These prices don't make sense. The price is too high. And I agree to a certain extent. However, what I'm about to show you in this video is that the valuation has already crashed to the basement floor. The problem with using just the price as a metric to whatever you think the cost of real estate should be is that the price is just a vector of exchanging value. But the price isn't the value of the thing itself. And the other problem with using the price is that the price is denominated in Canadian dollars, and the actual value of the Canadian dollar is constantly changing, and typically it's going down. So the price of something can remain exactly the same while the value of it is changing constantly. And I actually have a very perfect example of this right here. This is residential property prices for Canada from 1988 to 2003. And as you can see, prices were pretty flat for a while, but at the same time rising very slowly. This is the price. However, during this time period, you'll see the real price, the value of Canadian real estate, fell off a cliff very quickly and did not recover until about 2001, where prices finally started going up again. But even the peak in 2002 did not eclipse the value of it in 1989. So how can this be? Well, because during this entire time period where the price was flat, you had inflation chipping away at the value of the Canadian dollar. So typically when the dollar loses value, you need more dollars to buy the same thing. And because the price, the amount of dollars that you had to pay to buy real estate was unchanged, the actual valuation dropped, meaning the price of real estate would actually have to go higher to maintain the valuation that you had in 1989. And because it rose, but only ever so slightly, it wasn't enough to maintain the same amount of value that you had before. And that brings me to today's current climate and how Vancouver real estate's valuation has already crashed. You just may not see it. So prior to 1980, we used to calculate the CPI a lot differently. And then today, let me ask you this. Why is it that the highest inflation reading we had was 8%, yet pretty much the cost of everything has doubled or even some cases quadrupled? Well, it's probably because whatever they're saying in the CPI report isn't the actual rate of inflation. So I have here a chart provided by Shadow Stats, which, by the way, disclaimer before I fully get into this, Shadow Stats cannot give you any certainty as to the full accuracy of these charts. All right, so don't make any decisions based on these charts. This is the inflation rate calculated using the CPI that we used to have back in 1980. And you can see from basically 2021, 2019, whatever this is, 2020-ish, until basically now, the inflation rate has been between roughly 10% and as high as 18%. So even if we take an average of the last 3 years and say inflation was 14% on average, that means that the value of the dollar has basically degraded 42% over the last 3 years. And if we take a look at Vancouver real estate prices, we went from 1.259 to roughly 1.172. That's, roughly an 8% drop. You add that to the negative 42% that we saw in the value of the currency. Now you're down 50%. And then you add in the fact that the Canadian dollar is also down 3%. Vancouver real estate on a real inflation adjusted basis is down 53% over the last 3 years. Now, I know we all want the price to drop, but the price is just one variable in a plethora of things that makes up the value of an asset. Just because a stock is $7 doesn't mean it's cheap to buy that stock. And if we go another year with basically flat prices, we're looking at a 60% correction. If we go another year and go down 10% in price from where we're currently at, we're looking at a 70+% correction on real terms for Vancouver real estate. And a lot of people like to look at median wages, incomes, affordability, and all these different things when we value real estate. And I do believe that these metrics have some merit, but those metrics haven't really been important for a long time in Vancouver. We completely detached from fundamentals as a real estate market long ago. People aren't buying homes with 20% down anymore. They're buying homes with gifted money and large sums of cash. In 2023, I think I had one client who bought a home with 20% down and everybody else was 35+% down. And now I want to show you guys this chart, the global liquidity index. You can see that about every 4 years, we go through a cycle of more liquidity to less liquidity to more liquidity to less liquidity. And as you can see, we've just started a brand new cycle of more liquidity. So I'm not saying real estate needs to go up. I'm just saying there's a good chance that the correction that you're waiting for in Vancouver real estate has already happened, and that Vancouver real estate might actually be valued properly. And I'm also saying that local incomes and potentially even affordability may not matter as much as we think in a market where over 50% of the homes are owned mortgage-free and most of the buyer demand is driven by wealth. And currently, as we speak, the stock market and crypto are soaring to all-time highs. And a lot of that capital will probably make its way back into the real estate market, especially if it continues. I have a newsletter where I send out market insights and also handpick deals for myself. The link is down below. If you want to buy or sell, give me a ring. I'm that Agent Kelly. I'm making moves to move you. Peace.